Ever wonder why the SEC seemed to be on a warpath against crypto and then, all of a sudden, they started backing down? Well, a few months back, the crypto world was shaken by a massive piece of news. The SEC dropped its lawsuit against Kraken. And it wasn't just a one-off. This came on the heels of similar dismissals against other major players like Coinbase. So, what's really going on? Let's break down this surprising turn of events and what it means for the future of crypto regulation. The lawsuit, what was it all about? Thinking face. First, some quick context. The SEC, under its former chairman, Gary Gensler, took a very aggressive stance toward the crypto industry. Their primary argument, in this case and many others, was that crypto exchanges were operating as unregistered securities exchanges, brokers, dealers, and clearing agencies. They claimed that many digital assets traded on these platforms were, in fact, unregistered securities. The lawsuit against Kraken, filed in November 2023, was a prime example of this regulation by enforcement approach. The SEC alleged that Kraken's business model intertwined these functions, putting investors at risk and depriving them of key protections. For months, the case went back and forth, with Kraken vehemently defending its position that the lawsuit was baseless and politically motivated. The drop, why the sudden reversal? Balance scale. So, after all that legal wrangling, why did the SEC just give up? The official reason, as stated in their court filings, is that the dismissal was made to facilitate the Commission's ongoing efforts to reform and renew its regulatory approach to the crypto industry. This is a huge shift in tone and strategy. It signals a move away from the aggressive enforcement-first model that defined the Gensler era. Kraken, for its part, declared a major victory. They stated that the dismissal came with no admission of wrongdoing, no penalties paid, and no changes to their business model. Kraken, along with others in the industry, has long argued that the SEC's approach stifled innovation and created a climate of uncertainty. What it means for the crypto industry rocket. This is more than just a win for Kraken. It's a seismic event that could reshape the U.S. crypto landscape. A shift in regulatory philosophy, the SEC's decision hints at a new era of cooperation over confrontation. This suggests the agency is now more willing to work with the industry to create clear, forward-thinking rules rather than using lawsuits as its primary tool. Reduced uncertainty. For a long time, the threat of an SEC lawsuit hung over many crypto projects and exchanges. This dismissal, along with others, removes a significant cloud of uncertainty. This could encourage more innovation and investment in the U.S. market. A broader trend, this isn't an isolated incident. The SEC also dropped its case against Coinbase and is reportedly settling with other major players like Ripple, Robinhood, and Gemini. This points to a broader, systemic change in how the U.S. government is approaching crypto. The previous administration's regulation by enforcement approach has been replaced with one that aims to create a more stable and predictable environment for the industry. This is a massive development for the entire crypto ecosystem. It could pave the way for a more collaborative future and solidify the United States' position as a leader in digital asset innovation. With that said, thanks for watching and until next time.